So, hello, ladies and gentlemen. Once again, in case if you haven't noticed, as it was announced previously in the economic data release, we are going to discuss the U.S. unemployment rate. And I would like to remind you that although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy. So as you can see, at the current moment, the forecast for February is at 6.6%, whereas the December rate was 6.6%. Following a revised increase of 75,000 for December and after a rise of 274,000 for November, the net revisions for November and December were up 34,000. Private payrolls advanced 142,000 after rising 89,000 in December. The household portion of the employment report was more positive. The unemployment rate slipped to 6.6% from 6 in the December. This is the lowest unemployment rate in 5 years. The labor force actually rebounded a sharp 523,000 in January after dropping 347,000 the month before. Household employment spiked 638,000 following a 143,000 rise in December. And the household survey has a much smaller sample size than the payroll survey and is more volatile on a monthly basis. If the unemployment rate falls below 6.5%, it could affect guidance in the Fed's March FOMC statement. And let's move on further to our experts' estimates. And as you can see, the majority of experts were talking about 6.6 rate on unemployment. According to that, the median estimate was 6.6%, and the average estimate was 6.6%. High estimate 6.9%, and a low estimate of 6.4%, whereas the number of estimate was 86 experts. Finally, I guess it will be worth talking about our fundamental aspects, the impact that is on the US dollar, Japanese yen by our community members. And as you can see, ladies and gentlemen, our community members were quite bullish on the matter. That is 55.81% versus 44.90% bearish votes. And one of our bullish comments by Rokas from Lithuania that he believed that it would be after Wednesday release, US dollar, Japanese yen will go up, as during past several times if result is good, US dollar, Japanese yen goes up, is not good, it goes down, but after a while goes up. And one of our bearish comments by Kubla that the growing U.S. optimism in non-farm industry after the weather-driven downturn will have resulted in more workers being hired. The steadily increasing payrolls from January combined with the lowest job rate, 6.8% since 2008, leads him to anticipate that he will have a bearish move on this currency too. Yeah, so I guess that's all from my side, and I believe right now it's time to welcome Thomas on whiteboard to discuss more technical stuff. So Thomas, the floor is all yours.
Very much, Polina. Yes, I will be talking about possible negative surprise trading strategy. Oh, my computer is weird. Anyway, I'll be doing that on the And my slides are gone again. Anyways, I will be doing that on the Aussie United States dollar, and the general idea is for that mainly the market sentiment, which is mildly bullish, so the market participants are expecting the Aussie to gain ground against the United States dollar, which would take place and happen in case the data comes out slightly worse than expected. So I guess, as there was a question, I would say unemployment rate expectation 6.6, I would say 6.7, and let's say non-farm employment change maybe 150K. In such case, the expectation might be around 130K. Right, so yeah, besides that, we also see that the clear majority of pending orders are set in 50 and 100 pip range around the current market price are set to go long as well. So in case in some sort of volatility happenings and in general volatility increase in the market, we'll see the pair pushed a little bit higher. Besides that, rather mild expectations, bullish expectations are shown by the clients of other market participants and other fixed communities. You can see around 58 in general, I would say 60% being long. Now, currently the pair is trading slightly below the daily high, which is 0.91337, and was reached something like 45 minutes ago, around then. And for the trading strategy itself, I would say stop loss could be put slightly below the 200 bar simple moving average. As we can see, it kept the pair actually supported for, in few cases recently, so it might be it will do the trick this time as well. So I would say stop loss at maybe slightly below it, but 0.91250, as other, let's say, psychological or any other major level would be around Thursday high, yesterday's high at around 0.91136, and that might be a little bit too low. Now for the take profit, currently the pair is trading, as I mentioned, below the daily high, and what is more important, it is currently trading 8 pips below the 200-day simple moving average. So I guess I should indicate a separate color this level, as it might work out a little bit unexpectedly, maybe. Now maybe let's take something darker. A little bit unexpectedly for, let's say, very short term take profit, but I decided to go with, let's say, medium to long term. That would be around 20 pips above the current market price with the 0.9150. It is a little bit, let's say, dubious, right? Just because it is, but it is semi marginal number, and in my opinion, taking into account the recent developments, would actually rather make sense. So all in all, I would say, then quick look in technical indicators. What we're seeing also, we saw a mild support for the bullish developments in the recent futures. So go along at the current market price, take profit at 0.9150, stop loss slightly below the 200 bar, effectively 200-minute simple moving average at 0.9125. That's all from my side, so I'll leave all the slides on the whiteboard and give floor to my colleague Alexander to go on with this part of the presentation. Alexander, the floor is all yours.
Hello everyone, thank you Thomas and Paulina. So once again today we are discussing the potential impact of the US unemployment rate on the United States dollar, but I would also like to point out that at the same time we're having a release of non-farm payrolls as well as US trade balance. So data can be highly volatile today, therefore it will be rather interesting to monitor pairs' performance. For the positive surprise trading strategy, I have chosen United States dollar and Japanese yen. And as you all probably know, that this exact pair is highly affected by any fundamental data from the United States and Japan, obviously. So, first of all, as always, you can see that just during today the pair has been highly volatile already, and actually it has been fluctuating in 25 pips range. So, and as we assume that data can surprise markets to the upside, for example, we'll see some stronger than expected payrolls, which I personally do not believe will happen. Or, for example, unemployment rate will drop to 6.5%, and even though that would be mostly provoked, as always, by the fact that people are leaving from the labor force, but nevertheless, markets still can react to the upside, and therefore we suggest placing take profit around 102.8, right at the level of so just a small typo right here. That will be obviously not 102 but 103. So let me just quickly correct the trading strategy. So yep, here we go. The potential take profit was just placing around 103.8, right at the level of 4-hour resistance and just slightly above 2 days high, right at this level. Regarding the stop loss, we suggest placing it around 4-hour support as well as daily pivot and around 2 days low at 102.86. And so not a very risky trading strategy, as the stop loss is placed just less than 3 pips from the market price. Well, speaking about market sentiment, as always, we see that it's currently strongly bullish, with vast majority of traders buying the pair. Meanwhile, the greenback is bought in 64% of all cases, while the Japanese yen is sold in more than 52% of all cases across the board. And when having a look at pending orders, also we see here that vast majority of them in 50 and 100 pips range are placed to buy the pair. One more typo, sorry. So therefore the outlook for the pair is bullish. However, we see that just 3 minutes ago, 3 minutes left before the news release, the pair is approaching our stop loss. Therefore, I suggest we can move it slightly lower, just around daily pivot at 102 and 86, right? So there are still 3 minutes left before the news release, and I would like to show you something new actually. And here we go. That will be a table with both, which represent actually the market reaction of to the US non-farm payrolls as well as unemployment rate. And here you see readings from the last 5 months and actually the market reaction. So, for example, let's have a look at unemployment rate. Here we see that during the last 5 months, actually data surprised markets to the upside. We've encountered the unemployment rate hovers, as you already know, at 6.6%. And we see that normal market volatility 5 minutes before the news release and 5 minutes after the news release, for example, at Euro USD was between 48 and 72 pips. Therefore, that can be a potential market reaction, and, for example, take profits and stop loss can be placed in this range. When speaking about United States dollar and Japanese yen, here we see that market reaction has been highly volatile, as in October the pair advanced 45 pips, while in February the market reaction was 106 pips. That was more than 2 times more significant market reaction. And obviously that all these figures are practically the same, as both data are released in the same time. So let's now turn to the chart back, as we have just less than 1 minute left before the news release. And I will just zoom in. So we see that the pair is moving to the north. Oh, that was really impressive move, and obviously the take profit was reached. Something really very impressive actually, and the initial market reaction, that's 58 pips. Well, we see that US non-farm payrolls came at 175,000. Unemployment rate, however, inched higher to 6.7%, while US trade balance came at minus 39.1 billion. Obviously, this data was accepted and interpreted as a welcoming sign for the U.S. economy, obviously. So, therefore, Greenback has received a strong bullish bias, and that was pretty much unexpected because we all know that due to severe weather conditions, the U.S. economy was performing not very well during the last couple of months. And moreover, Wednesday ADP report also showed that payrolls decreased significantly. And on the 4-hour chart, we see that the pair is approaching a weekly resistance at 103.68, and just 16 pips left before this level. Well, speaking about OC and Greenback, we see that obviously the stop loss was breached, and in case someone used this exact strategy, therefore losses will be limited. And once again, the data came actually strongly better than expected, including payrolls. Therefore, the Greenback has received once again strong bullish bias, and as we see that, for example, technical indicators on the 4-hour and monthly chart are sending buy signals. Therefore, the pair is expected to appreciate. And once again, I see that Dr. Dow is pointing at market sentiment provided by other market participants, and here we see that Saxo Bank traders are strongly bullish as well, practically the same as Dukascopy traders, expecting the Greenback to continue its appreciation versus the Japanese yen. Yep, Thomas, I see that the Aussie dollar is recovering slightly, and currently the pair is trading around 0.9121. Well, I guess that will be pretty much from my side, and yeah, hope that was useful for some of you. And I'm giving the floor back to you, Polina.
Thank you very much. Technical matter. Okay, so let's sum it up. So U.S. non-farm payrolls, 175,000, U.S. unemployment rate 6.7%, and the U.S. trade balance minus 39.1 billion. So we had a big jump in the U.S. Dollar Japanese yen. That's an interesting number over there. So okay, Dr. Dow, you have any ideas about it? Just to looking at the numbers.
Yeah, it's just pretty entertaining. I mean, basically the numbers twice as much as most people were thinking, and basically we're looking at. As I meant to mention to Alex, the beige book from the Federal Reserve on Wednesday mentioned weather 119 times in it, and everybody talked about weather, and I said, how could we? Remember we talked about this. How could the weather have much of an effect when we saw in the ADP construction actually went up 12,000? Remember we talked about that on Tuesday. And sure enough, even today's numbers, 15,000 increase in labor. So I can tell you that there's a construction project around here going on, and they worked right through the snow, and they were putting steel up, and they didn't pay attention to the weather. No doubt that we had like half a meter of snow, and there's still a quarter meter of snow out there now. But that didn't stop them. The participation rate is 63%. 63%. I think that's pretty much flat, maybe down a little. So, I think that again that the weather. We talked about this on Tuesday. I don't think the weather's having much of an effect here. I think it's just wishful thinking, and that wow. I mean, 175,000. A lot of people had brought themselves down under 90,000, 95,000, like Goldman Sachs and so forth. So. As far as I was concerned, when I saw the ADP, I thought that that would be telling us something, and sure enough, we're seeing it translate through the BLS, the Bureau of Labor Statistics number itself. There was a lot of interesting private sector increases. We did talk about that on Tuesday, about the ADP number, and we thought that we didn't see as much private sector increases, and we thought that had a lot to do with the lack of confidence in government itself. You know, the policies of government, you know, Mr. Obama, so forth. But they seem to really push it up here. And unemployment rate now is 6.7, so I guess we went up a tick. We went from 6.6 in January to 6.7, but we saw an increase of, and the participation rate was unchanged at 63 across, 63%. So my opinion really is that, you know, the numbers are trying to tell us that they're trying to finish off work that needs to be done, with projects that are being done. And, you know, that in the end result is that we look at in the other numbers, like we were looking at the producer prices and consumers, and so far we're not seeing any real excitement. I'm sure that this is a good number, and that the next number that we go look at down the road over the next 3 or 4 days will probably come out bad. It seems to always work that way anymore. One number good, one number bad. I see the DAX, which was down 85 points this morning, Zetra DAX, and now it's down 21 points. I saw the UK market down about 15 points. It's up 9 points now. Kakaran was in Paris was down about 12 points. Now it's up 11 points. So, wow, a lot of fun here for the traders, but I don't think it really gives us any more or less insight. And the reason why I'm going to finish this off with this point of view is when we have to play such a guessing game to statistics that should be much more firm and comfortable. In other words, we should have more confidence in our statistics. When we have such a dichotomy, such a large question mark all the time, it tells us that that's not good. That's what it really comes down to. It's just not good. So that's the that's the ending result. Is that too much guessing? It's obvious. In other words, it's, as they would say, it's plain as the nose on our face. We have doubts on our numbers, and a lot of people have doubts and are guessing way too wide a number, and it just shows you the lack of confidence in the economies overall. But when you're putting in $70-some-odd billion a month, you know, someone said to me yesterday, "Wow, you know, they're really paring back now." And I said, "What do you mean they're paring back? Instead of $85 billion a month, they're putting $70 billion a month in. So how's that paring back? That's still an increase. If I ate 10 chocolate chip cookies a day, and now I'm only eating 8 chocolate chip cookies a day, I'm still I'm eating more than I should be. I should be eating 0 chocolate chip cookies." So, with that fun fact point of view, I'll leave it to Alex and Thomas and Polina. Doc Dow's being Doc. Does that make any sense to anybody? That was cool. Thank you, Thomas.
Thank you very much, Dr.
All right.
Dow. A very interesting comment, as always. And yeah, I guess that's pretty much it for from our side. The news release. Thank you very much, Thomas and Alex. And yeah, I guess yeah, that was fun. It's always fun to to talk the news release with you. And yeah, I guess it's time to come back to your webinar.
All right,
Let
here we
us
go.
find the video story. And,
Everybody, thank you again.
Go ahead.
All right, let me kill this sound here. Okay, the question marks are all over the place by all the talking heads here in the United States, and that's pretty much what it comes down to.